Well, Nykaa reported a decent set in their second quarter, a 7% jump quarter on quarter in their revenues, the EBITDA jumping by almost 33 odd percent. But we're now joined by Falguni Nair as well as Adwaita Nair of the company to detail what took place during the quarter, but more importantly, what is going to take place in the near future itself. Thanks a lot for joining in, and this is the first time we're speaking to you, Adwaita. So welcome to CNBC TV 18. Before we talk about numbers, Falguni, just wanted to understand the rationale behind, actually deferring the record date of the bonus from November 3 to November 11th. Can you tell us what happened there?
As far as I'm concerned, I'm not aware that we've deferred the bonus date. I don't know if there is some misunderstanding or something, but as far as we are concerned, from the date of the board clearing the bonus, at the end of voting period, which is about a month later, then you need to give clear 5 working dates, and that is how a record date is determined. And that is according to LODR rules and regulations and exchange rules and regulations, and that is what it is. So I'm not sure why everybody thinks it's a deferral of the record date. Maybe there was some misunderstanding based on when the voting finishes.
Right. It seems as that because, the first release that came by did mention November 3 as the record date, and then we got another release. So it may have just been a technical error. But talking about the numbers itself, and Adwaita, I'd like you to throw some light on the fashion vertical that did even better this time around than the other verticals of the company, and thus increased its contribution. How do you think the third quarter has panned out? Because the second quarter we know is seasonally weak for everyone. You guys have done well there. But the third quarter so far, how do you think that your business has been so far?
Yeah, thanks for that. I think we're quite pleased with the fashion performance for Q2. As you sort of insinuated, fashion has grown 43% year on year. It does contribute about 26% of the consolidated company's turnover. I think we're furthermore feeling good about the business in the sense that it is continuing to be contribution margin positive with a clear line in sight in terms of profitability. And then lots of other core metrics are looking good, whether it's a much higher average order value, whether it's the expansion of share of our private labels. So overall, feeling that a lot of metrics are headed in the right direction from the fashion business. You are right that the July, August, September quarter is actually considered typically a seasonally slightly weaker quarter, and you definitely do see an uptick in October, November, December, particularly with the Diwalis and Christmas and so forth. So yes, we do believe that Q3 that we're in the middle of right now tends to be stronger from a seasonality point of view.
Right. So that brings me to the larger question, Falguni. Where do you see the business normalizing in terms of its margin run rate, and all the things that you've invested in, where do you see them grow at a sustainable basis going forward?
I think, like you're aware, we are building currently 3 main businesses. Beauty, which is already a mature business, but we are benefiting from margin expansion in beauty because of our size and scale, where we are now in beauty business, taking our warehouses closer to the customers. Earlier, we used to have maybe in 5 regions, we had most of our warehouses, but now we are going in many states, including almost 15 states where we may have our warehouses over medium term. So that is putting us closer to the customer and helping us control our fulfillment costs. We are in a very good place on a beauty business as well as on gross margin expansion due to our service income coming in line with, we're able to drive better service income because of becoming a platform of choice for brands to market on our site. So I think these are the benefits on the beauty side of the business. I would say that, again, there is seasonality to our business, and October to December quarter tends to be the seasonally strongest quarter. And I think beyond, we do believe that generally both beauty and fashion as industries are going to benefit over next 5 to 10 years in India. And within that, the e-commerce business are going to benefit. So we remain very optimistic about our business from a medium to long-term perspective. And near term, I think the company is working very hard to make the business decisions that help us structurally deal with inflationary pressure that exists right now.
What we really want to also understand is, and Adwaita, you can come in on this, there is a fair amount of competition in the same space. We do see a lot of people looking at this space now that, it has achieved critical mass, so to say. In that, how do you maintain your exclusivity? What share of revenue do you get from brands which are exclusive only to Nykaa? And how do you plan to expand that?
I think we don't measure, we get exclusivity from brands which are of short-term nature, typically sometimes 1 year, 2 years, 3 years, and sometimes we get exclusive, certain ranges are exclusive with us, and that may also change. So it's very difficult to define products are exclusive. Assortment strategy that drives uniqueness of Nykaa, whether be it through our own private labels, where we don't call them private labels, but our own brands, or sometimes the international brands that we're bringing into the country. Like you're aware that we brought Huda earlier. Later we brought Tilbury and many other exciting brands on the beauty platform. We are doing something similar now for fashion, where our latest partnership with Revolve is something that we are offering, unique offering to our Indian consumers. So I think Nykaa does work very hard to bring certain certain unique experience to its customers, and that has been an important part of our success.
What we want to understand is that there have been a lot of senior exits as well, senior level exits. We've had a replacement of the CTO before that as well. There were a few. Can you explain why that has happened?
I think many of our senior executives were with us for more than 6.5, 7 years, early startup. And many of them were on their personal journeys at a time where they wanted to take their own personal time to do the next innings for themselves. I think each of them are being replaced by very high quality talent that we are seeing. I think earlier we talked about Vishal Gupta, who has come with many years of experience at Hindustan Unilever and Unilever internationally, and he has joined us to handle our beauty private label business. Similarly, today we've announced yesterday, we just announced recently, but he has joined from today, is our new CTO, Rajesh Upalapati, and he comes with more than close to 20 years of experience at Amazon. He has tons of experience on e-commerce side, and more recently, for last 18 months, he was with Intuit. So we are very excited about the new talent that we are onboarding, and it is just in our minds, it's a logical progression of of people from their career perspective, what their aspirations are at that point in time.
What's the customer acquisition costs difference between BPC as well as fashion?
So I think,
go ahead, Advait.
Right. I think we find a marginal difference in terms of the cost of customer acquisition, but they're pretty neck to neck. What we do find is that there's a difference in obviously the repeat to new behavior on the beauty versus fashion side, with beauty obviously being 5-6 years ahead in terms of the journey. And so therefore the marketing costs on the beauty side, do have the benefit of just having a very strong repeat behavior playing out. But I think what we're feeling pretty good about on the fashion side as well is that now as we're entering, the end of the 3rd year and entering the 4th year of the fashion journey, we're finding that similar sort of repeat behavior is finally starting to kick in. And so, this quarter is the first time we've sort of released the fact that 66% of fashion's revenue is coming from, fashion's GMV is coming from repeat buyers. So we do feel that, again, that similar cost structure that we were able to achieve from the marketing point of view in the beauty side should be within fashion's reach in the near future.
How big do you think can the international business be for you guys in the overall scheme of things because of the arrangement that you've recently made with the apparel group?
No, I think our international journey is just a very, it's at very early stage. And we are very excited about GCC countries and the potential they have in terms of consumption of beauty products. And this JV is very important to us, and it can add a lot of good value to our long-term potential of our business. However, I think I would call it very early days to predict any large international forays.
Right. And the final question, this one to Adwaita. Adwaita, there has been a sharp dip in the stock price that we've seen, almost 60% this year from the highs. It's now below the IPO price as well. You guys were some of the last few new businesses which are actually holding up above the IPO price until this month where we saw that decline. There is a fear that a fair amount of pre-IPO investors will offer their shares once the lock-in ends as well. What is it that you'd have to say to everyone who's looking at the way the stock has corrected in terms of the business prospects of the company going forward?
Look, I think we feel very confident in terms of where the business is headed. I think the Q2 results sort of do suggest that, whether it's 45% GMV growth at a consolidated level, whether it's profit before tax growing at 542%, sort of at every line item, we're able to deliver very strong year-on-year growth. And beyond the numbers, I think, what I would say to folks is I think the business has so many fantastic engines in motion. You've got the core beauty business, whose contribution margin is looking absolutely fantastic. And again, showing very strong growth year on year. You've got a new engine of growth, which is fashion, which is continuing to deliver above average growth year on year and will continue to be a very strong driver of growth in the near future. The fashion business also has a line of sight when it comes to profitability. So that business too has a point of view in terms of when they will become profitable. And then finally, you have some of our new initiatives, whether it's Nykaa B2B, what we call the Nykaa B2B business and the Nykaa Man business. So I think my sort of one overarching statement would be is that this is a company that has at least 3 or 4 engines in place. Each one has a path to profitability. Each one is being built in a very disciplined, thoughtful, sustainable manner with the right level of risk being taken. And so I think when we have a slightly longer point of view and a longer horizon that we're looking at, this company is bound to perform extremely well.
All right, we take that point. Falguni, just a quick follow-up on that. Are you a buyer of your shares at these levels?
I wish I could buy more easily, but yes, I would. I mean, in the sense that, look, it's very hard to say that, but all I can say is that we are definitely, as a company, I mean, as someone who believes in Nykaa, we are clearly a family that truly believes in our company and our performance and our stock.
And you're not looking to buy. I hope you're not looking to sell the ones that open up for selling as well once the lock-in ends.
No comments. You're already pushing us in talking about things that we can't talk about. So it's very hard now.
That's my job. Thank you so much for joining in and giving us the details on your business and the outlook. Thank you so much. It's been a pleasure.
Thank you.